Well, joining us with his analysis on the equity market is Jason Horn from Steyn Capital Management. Jason, hi, good to chat to you. Of course, we've got our interest rates this afternoon, just after 3 o'clock with Lesetja Kganyago. The US keeping theirs unchanged. What do you think is going to happen, and why do you think they kept them unchanged?
All right, thanks for having me. Look, I think if we think about the US, we always need to bear in mind this dual mandate that the Fed has. So from their perspective, they need to balance inflation expectations as well as what they're seeing in the labor market. And as Fed Chair Powell did allude to last night, it does seem that there are concerns around the labor market, but at the same time, inflation does seem to be pretty much in check. So from their perspective, going forward, probably they're holding for now. However, there were some governors that were dissenting on that, opting for further rate cuts. But by and large, all priced in, looking at probably another 2 cuts this year in the US. South Africa, typically, the SARB does follow what the Fed does. So I think we have seen analyst expectations in the street over the last week or so vary in terms of what they think is going to happen, but it does seem that consensus is a hold. I think the likelihood of a hold is quite high in South Africa. I mean, let's not forget this, the SARB is typically quite hawkish, but at the same time, there are a lot of good things happening in South Africa, and one mustn't forget what's happened with the rand and that impact that it will have on inflation going forward if it can sustain these levels, of course. But at the same time, we just have to kind of look north and see the tensions rising and bubbling away in the Middle East right now with Iran, and obviously the impact on oil prices, which more than likely will probably see a cautious hold here, but more than likely a couple rate cuts penciled in for the rest of the year for South Africa.
Right. Now, the rand also this morning gaining from yesterday's close. I was watching that, and I suppose that's anticipation ahead of 3 o'clock this afternoon.
Correct. By and large, still very much a dollar weakness story, but yes, it does seem to be quite strong against some of the other counters, looking at the euro and the yen and the pound. But I think we mustn't forget the terms of trade for South Africa, looking at this rally across the board and all the major commodities that we export, and it's definitely providing a significant tailwind for South Africa. I did say last week, would I be surprised if we had a 15 handle on the rand sometime in the middle of the year? I said no. But look, I mean, the move over the last week has surprised somewhat. But it does seem that we are approaching fair value if we kind of look what the rest of the analysts across the board are saying. But the long may continue for South Africa with a strong rand.
Yeah, you would have heard our story now about Woolworths in our bulletin. They're expecting production to be up, but looking at their stock today, it really has fallen down.
It has indeed. What's concerning is the rate of change in the growth that they are expecting. So broadly, revenue was in line, but we are starting to see some margin pressure, and that level of growth is starting to ease across the board. Even in the likes of food, it looks like Country Road Group not doing so well either, although it does look like they potentially are back to profitability. But overall, it is quite messy, and unfortunately for Woolies, they're lapping quite a weak base as well. So definitely one that the market wasn't expecting. So that's why you are seeing such a big move to the downside.
Right, something else we've been noticing, Glencore as well, their production reports, production down. Concerning for them, they've been quite strong up to now.
They have indeed. Look, I mean, they're pretty much down across the board. But I think given the basket of commodities that they mine and the rise in, the exponential rise in prices that we've seen over the last few months, it does seem to be ignored by the market. I mean, we just got to also bear in mind the potential takeout by Rio Tinto as well. So we are seeing it move quite nicely. But yeah, that is the benefit of having a basket of goods where the prices just keep rising. It's almost inconsequential in terms of your what your production is at this stage.
No, sure. All right, so we'll leave Glencore there. What's your stock pick today?
Yeah, Ray, my stock pick today is Prada. So I picked it last year as well, but just for the viewer, it's an Italian luxury group, and it's built around the main brands Prada and Miu Miu. And one mustn't forget they have added a third major brand in Versace. So the stock is listed in Hong Kong and has a relatively small free float. So it has been overlooked by a lot of investors. It has traded down of late, kind of in line with most of luxury post the Richemont and Louis Vuitton disappointments in terms of their earnings. But yeah, I think both core brands continue to perform well. I mean, the most channel checks that we've looked at, it does seem that things are looking good for Prada and Miu Miu, and Versace by and large is pretty stable. And one mustn't forget that Prada is a clear outlier in the luxury space from a valuation perspective, trading in and around 12 times PE. And this is partly due to that Hong Kong listing and it being overlooked. So, look, I mean, there are still the future catalysts do remain in terms of a potential future Milan relisting. Or one mustn't forget that the Prada family actually owns 80% of the business. So there's also a potential for a take private by the Prada family.
Sure, there's a whole discussion right there. Jason, thank you so much. Good to chat to you once again on Business Lunch. We do appreciate you taking the time. That was Jason Horn from Steyn Capital Management.